Welcome to the Oxen Group Nightly. My name is David Ristow. I'm the CEO, President, and Founder of the Oxen Group. Please check us out at www.theoxengroup.com for all your financial analysis and investment opportunity ideas. Okay, well, today was June 22nd. We're going to have your Wednesday market wrap-up as well as a couple of our new positions that we had and exits today. Also, we'll be talking about some of our other portfolios, including Giorgio's Corner, as well as the extended value portfolio. I'm actually joined today by leading trader of Giorgio's Corner, Giorgio Ferreira.
Hey, David. Thanks for having me.
We'll also have our forecast for tomorrow, as well as always check our disclaimer at the end of the video. So the market finished down today after a recent relief rally that we had off the 11,900 level. As we've been talking about on the site, it appears that we have an 11,900 to 12,200 range currently, and I think that range will pretty much hold until we get some pretty fundamental differences in the market. Hit the 12,200 level today, look what happens. Market drops back down, and so we turned a little bit bearish right now after being pretty bullish to that 12,200 line. Crude inventories dropped a little bit today, slightly, but the commodity stayed neutral overall, a little bit to the downside actually. And Federal Reserve, this was kind of the key thing, I guess, for the day was Ben Bernanke, offered no signs of stimulus today, despite talks of slowdown in the economy's growth, and that was kind of the key indicator that helped kind of push the catalyst to the downside. We were looking at the diamonds today. Again, we're talking about that top that we see. We see that 12,200 top. Some people look at the 12,250 top. But if you do look at 12,200, we have been not able to break out of that for this entire month. And 12,250 does seem to be a pretty heavy line. We also were right at that 20-day moving average today, and we did finish down below that 20-day moving average, so we weren't able to break that or overtake that. And I do see that as being pretty negative on the day. There was very light volume today in the market, so again, that could definitely change things moving forward if we can get a big volume day. And we do have a lot of neat earnings and information coming out on the economic side tomorrow. So the market was able to came off the lows of the open and sort of got a nice rally into the Fed minutes. Typically on Fed days you do see a nice rally or at least some strength in the market. Definitely never usually sell off. And then into the meeting we went pretty strong. But after the meeting started, Bernanke started opening his mouth and talking, and eventually that really hit the market. We hit the 12,200 line, couldn't break through it, couldn't break through the 20-day moving average, bounced off it, and saw resistance there. We were able to take advantage of that pullback, and we did a couple of trades today, or covered a couple other trades. We did sell some FAS weekly calls, the June 24th, 2011 $25 calls, which worked out very nice for us. We got in at 27 cents, and we were able to cover those at 22 cents and 21 cents and 17 cents. We also covered our first solar calls. We sold the $130 calls yesterday on a nice at the high, and we were able to get those at 218, and we were able to cover those today for a really solid 60% gain. So other than that, we did have a weak open to the day we tried to short Yingli Green. I wish I could show you that chart. I forgot to put that up there, and you would be surprised to see what happened in that one. Lost 3.9% on that one today. Just sort of one of those trades. Looked like everything was lining up for it correctly. The market was looking weak. The stock had weak technicals, was a lot of resistance lines, and the fundamentals were definitely not there for it to rally, but it was able to take off and sort of broke through a couple moving averages and was able to get the support there. A lot of short covering on the day, basically. We did recommend Pilgrim's Pride to our clients intraday at 510, and that closed at 540, so that would be worth a 6% gain if you were able to get into that and trade that. We did recommend that position to our clients today as well. I'll let Giorgio take away talking about his day.
All right, so today we exited the vertical put spread on USO a little bit early. I apologize if you didn't receive that email prior to the market close, but this spread actually has a negative 3-cent theta, so as long as oil is pretty much neutral near the open tomorrow, you should be able to get out at to buy back the spread for 10 cents or less. Reason being that we got out of this trade, there was still a 69% chance that we'd win, but the strike that I sold, the 34 put, does not protect us from oil trading at $85 a barrel, which is a definite possibility in the next month. I did not like what I was hearing from Bernanke. David explained we don't see any signs of a QE3. I believe there was a lot of window dressing on the Greece issue during this rally, and I definitely see resistance at the 12,200, and that put us right into the selling the 123, 124 vertical call spread. This one's already gone pretty well into our favor. We sold it for 37 cents, and now it's only at 30 cents. We hope to get out for 27 cents tomorrow morning. We may adjust if the market gaps down, but hey, if there's any upside left, I feel strongly that we cannot go through 12,300, let alone, I've been speaking for weeks, 12,200 is the resistance level.
Okay. So that's what Georgia's doing. Also in our extended value portfolio, which is basically our long-term portfolio, we did actually release a recent story from about Apple, and we were able to, we priced that at $556. We had a lot of talk. We had never done a pricing on the Apple, just hadn't fit into sort of some of the companies we cover and we're interested in for the longest amount of time. Made a lot of clients talking about, after it dropped below its 200-day moving average, like, what's this stock really worth? And I priced it on a discounted cash flow analysis that we've designed here at the Oxen Group, and we came up with 556. The interesting thing about it is I ran it to try and get the current price at 315 to 320, and the only way I could get that price is if I gave them 0% growth each year for the next 5 years, keeping pretty much the same amount of shares, the same amount of debt, no debt, the same amount of cash and everything. If for the next 5 years, they would have to have zero growth whatsoever in order to maintain this price. So, I mean, if you want to make the bet that Apple's not going to grow at all, then this is not a good stock to own. But overall, we look at this stock as vastly undervalued. It's actually a value play now. It's not just a growth stock. So, and that story is available for our extended value portfolio members and premium members. For tomorrow, the market had a healthy pullback, definitely on the refocus to America today, and we are nearing a short-term high. With initial claims and new home sales out tomorrow, that could provide another catalyst to the downside, although it could provide a catalyst to the upside. We do have a lot of earnings, interesting earnings coming out tonight. We have tonight and tomorrow morning. We have Conagra Foods, Discover, Lennar, Rite Aid, Bed Bath & Beyond, Sonic, Red Hat. Tomorrow evening we've got a few more interesting companies, so there's a nice amount of earnings coming out tonight and tomorrow morning that really will help play an influence in the market, and if those are good, I could see us popping back up and covering sort of the down day today, but overall we do remain kind of bearish on the outlook over the next week or so here. That's going to do it for today. Visit us at our website at www.theoxengroup.com. Email us anytime, call us, become a part of our 70% plus accuracy.